Good afternoon, everybody. This is Dennis Wilborn. I want to welcome everybody to the Making Money Trading Stocks, Options, and ETFs for the Active Trend Trading System. I am the founder and basically head analyst for Active Trend Trading. And I'll be joined, I'm really pleased to announce my son is going to be joining us. He will be plugging in occasionally. He's raising a family up in Boise, Idaho. And he'll be joining us occasionally for the Friday webinars. Really good technical analyst, taught him everything I know. Plus, he went ahead and found, and educated himself also. He was working in ministry work at Marin Asian Community Church in Marin, California, or in Marin Valley, or Marin County. And then they basically sold out in California and went to Boise. So I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Future, what did I say there? Yeah, past performance is not an indication or a promise of future performance. Here's a little bit about me. And again, Brandon started working with me, gosh, back in 2005, he did a lot of the basic helped me with a lot of the development of the actual active trend trading system. And so, again, very pleased that Brandon is on board, and I'm looking forward to him continuing the family work going forward. Also joining us will be joining us for the customer service part of the active trend trading will be my wife, Michelle. And remember, most trading errors come from lack of patience and a compulsion to do something. If you are a trader, you have been compelled to do something even when you didn't want to. And getting past those impulsive urges is a critical part of becoming a wise and profitable trader. So it's that getting past those, even when nothing needs to be done, we want to do something. We don't sit on our hands well, even though Jesse Livermore, probably one of the greatest traders of all times, basically said he made the most of his money when he wasn't doing anything. So just keep that in mind. The objective of this session is basically to cover, a timely actionable intel review at the end of each week. Take a look at the real quick market review. That's the biggest piece of this. No strong market, strong rebound yet, but I want to take a look at the actual charts to see what's going on. What can we expect moving forward? Stocks, ETFs performance. We'll take a look at a couple of those. Here's where we're sitting as of about 9 o'clock this morning. As it stands right now, all the indexes are still up for the year. Russell's getting close where it could slip into the negative side, down for the year. Active trend trading doing well with the three strategies. We're up about 27%. Here's where how each one of the strategies stacks up. Really want to be focused on strategy 1, strategy 2, going into the end of the year, and then finish strong also in strategy 3. It's been kind of an interesting year trading each of the strategies, but it's been an interesting year. And so, and then if you are a premium member, of course, you get the this comes out every week to premium members. It's called the Go No Go table, where I highlight and identify specific levels within various entities, like the Magnificent 7 ETFs that we follow, plus some of the stocks we follow. We'll take a couple of looks at those. Let's go ahead and get into our market review right now. And I want to respect your time. So let's take a look at SPX. Right now, there is a battle royale going on for control at the 200-day moving average. Right now, the S&P is slipping down through that level. Now, what does that mean to us? Is that good or is that bad? Well, basically, if you're looking for a stronger correction, we may be getting it. Where might it go from here? Well, one of the things I was looking at, and I've been talking with a lot of folks about over the past few weeks, is this particular move that we see going on here. The anticipated move from getting down into this level of support, and almost each one of the indexes is showing a very similar pattern. Got down to that level of past support where it did really, that's where the buyers came in previously. Well, thank you. Okay. I just got filled in a position for a nice profit for the day. So excellent. So got down there. We were expecting basically hit the lows, basically where buyers came in previously. Expected a move back up. And we sure enough did. We moved right back up into the, in this case, the 8-day moving average. The anticipation was that we would get a little bit higher, like up to the 20, or even up to, well, up to the 100, or up to the 20, or up to the 8 or the 50, 34 moving average, and then roll back over for a either pull back down to the all the way to the lows, and or a down slightly below it, and then another bounce going into the end of the year. However, as we see, what happened was price action respected the 8-day moving average, and what that tells us from a technical point, folks, is that it tells us that if it's respecting a weaker moving average, such as the 8, then the underlying strength of the market itself is very weak. So do we want to, and so yes, we are waiting for a turnaround. So what might happen here, and this is something just to keep in mind, is we're getting a shoot up. We found resistance. Now we're shooting back down. And so where will it stop? Where will the downside stop? Will it stop back here at the, about the 2715 level, 2710 level, and then rebound? Kind of a W kind of bottom. Won't call it really a double bottom, but it is shaped like a W. And it comes back out. And so we'll be looking for, if we come back down into this area, will the TSI show positive divergence? In other words, it also rolls over. The momentum doesn't get quite as low. Then that could be a very positive transaction or positive move if we get back down to or slightly below below the past low. And it goes that way for and so this is a very classic move. Again, in that it wasn't able to push back up to the in that it wasn't able to push all the way back up to the 20 and hung right there at the 8-day moving average, a sign of underlying momentum weakness in the index. So let's go over, and I'm looking at the indexes today, guys, not the individual ETFs, because I don't want anything to be distorted in the way we look at them. The ETFs tend to distort things just a little bit. And what we see here, similar type situation. Although NASDAQ pushed all the way up close to the 20, got up to the 100-day moving average, and then is rolling back down. At this point, it may find support at the 200-day moving average, but at this point, I'm not going to do anything because, one, I've got TSI on my weekly chart still pointing down very hard. It is holding up at the 40-week moving average, which equates to approximately the 200, which we see there. So it may stop there, or it may break that level and come on down and retest at the 65 or even the 62.34 level. So as I said, we're waiting for what's this going to do. As you see, and this is one of the reasons why I really like the TSI indicator, folks, is there is a kind of hidden levels of support and resistance. One of them is where I drew in the oversold at, somewhere between the -42 and -50. And then on top of that, then there's one at between 20 and, on both sides, between a plus and minus 20. one at the zero line also, and then for positive 40, positive 42, and a positive 50. And so what that tells us is oftentimes as price action moves up here and the TSI approaches one of those areas, it can say, hey, this is where I'm going, and where I'll possibly find resistance on the price action up here. So that's what I really like about it. And also it puts in patterns itself, like when it broke down through this level or through this downtrend, it was right close to the top. So, that's one thing that's really a good idea. Learn how to interpret and learn how to use the patterns for your benefit when you're trying to trade. So NASDAQ, Russell. That's not the Russell. Sorry about that. Russell. Okay, Russell, weakest of the three indexes. Here, we got good news, we got bad news. One, price action pushed up to the 8, failed, is falling back down towards support at about the 1530-ish level. At this point, as it approaches that level, what's the TSI doing on a daily chart? Well, it's looking like it's going to put in a positive divergence. Hasn't done it yet, but if we get pushed down to at or below this, past swing low here, and the TSI stays above this low level here, that would be considered positive divergence. Therefore, waiting for a reversal candlestick or reversal pattern for a trade to the upside. It may very well, if it breaks down through this low, it may actually push all the way down here to the 1500. There is past support, past breakout support right there at about 1510. And so that would not be surprising. And if that was grouped with positive divergence, wow, possibly a great opportunity. At this particular time, though, if it does push down to a low, that would be continuing to put in a new low in a downtrend. And so how do we want to establish our directional bias? Oftentimes, and we're going to have presentations on this for premium members about how to establish your directional bias, because if a person will learn to trade in the direction of their directional bias, in other words, let's say your directional bias right now is to the downside, and if you will wait for the pull-ups to resistance, to moving averages, and then trade back to the downside, that's the proper type of trade. Oftentimes, I think the majority of our money is lost, or losing trades, is because we're trying to trade opposite of what our directional bias should be. So there's going to be more on that to come in the very near future for premium members. So let's take a look at. So that's what I said. I wanted to give you a really good overview. Let's take a real quick look. I'll just take a snapshot of your mind what Russell looks like. Then let's go over to IWM. How does it look different? As you can see, IWM looks very similar. It is pushing down into a support zone. Now, this is a support zone that reaches all the way down to 150. Again, I am encouraged that thinking that we are getting really even that much closer to a reversal. We took this reversal here. It failed. This was this reversal pattern was rejected. And so we got out of the trade really quick with a very small loss on the market action points. But so you can take a look. Okay, this is what this looks like. Again, pushing down towards the low. Look what's going on here. The market forecast on a daily aspect is forming a 3-line cluster, which typically when there is a 3-line cluster, price action between 1 to 4 trading periods after that generates a reversal. We had a 3-line cluster right back here in this area here. And sure enough, 2 days later, it kind of a little bit of a bullish harami, did a reversal right back on the moving average and then failed. Throw that also on TNA. What's TNA doing with this? As you can see, TNA, we can play something similar, but it would be, you know, down in the about the 59 to 60 level. So that's a fairly good target. And again, the market action point or early warning alert, folks, will get specific early, basically text alerts on when we're, you know, processing and getting into a trade on each one of those. So let's go on back over. There we go. Let's take a real quick look. I want to go back to QQQ and look at, I basically forecast we had support at the 167 to 171 daily TSI signal. That's what was showing up at the beginning of last week. And you know, if it holds above the 200, which is positive, that's what it did last week. We'd like to see it move up and retest a solid entry when the weekly TSI turns up. Well, what didn't happen in that scenario? That's always a great question to ask. What didn't happen? So let's go over here to QQQ. And as I said, basically I said we were finding support, or at that time we were anticipating support down here at the approximately 175 down to the 172.50. That part of our forecast or our analysis held. However, we did not get, you know, we got a little bit of a reversal, but not much. Retesting back down against the 200-day moving average. As you can see, TSI weekly chart, still pointing down like it wants to fall some more. So I'm not in a real big hurry to really jump onto another trade here until I get some kind of reversal pattern going here on the weekly, complemented by a reversal pattern on the daily. And again, we're seeing a formation of a potential W type pattern, which will be pulling all the way back down to this level approximately, and then rebounding from there. And so from here back to that past high is about 5.7%. So keep an eyeball on that one. And I'm going to throw it out, and I'm not going to throw anything out. WRD was a stock that we were also looking at going into last week. And as we see what's happened with this, we had a nice little push up. We had said, hey, if we get a, let's see, last was here. We were saying it looked like it was rebounding to take off. However, the pattern was, you know, the reversal pattern or the upswing pattern was rejected and failed. And now it's back down here. And just because it failed once doesn't mean it's going to continue to fail. What it means is that, okay, that first opportunity failed. Right now, it's pulling back. It is testing off the 200-day moving average. You know, so if the market kind of rights itself going into the end of the month, just keep an eyeball on it, because right here we've got, what do we have right here? We have earnings coming up, excuse me. 11/7 after the market closes. The other one that we put on the list last week, and I'll just cover this really quickly, is Wing. Again, for the market sell-off, Wing's holding in there pretty darn good. On a weekly chart, yeah, that shooting star type pattern, not real a big positive of that. But if we continue to get a pullback into like the, you know, into these areas here, like let's say all the way to 70 or the 20-day moving average, it also has earnings coming up on 10/29, which, if I'm not mistaken, is actually a little bit over a week from now. So it may give us a bounce in earnings, but those two stocks right there are so much stronger than the market itself. They could give you some nice potential trades going forward into next week. So, okay, let's wrap things up for today. There we go. And again, this document is sent out to all premium members. And so here's where we're sitting. Had a loss on our Tesla trade for the week. We kept our stops really tight, so we lost $105. We're up nicely on the strategy 3 process, slightly down in spiders, but up nicely on BABA and Tesla. On the residual value, cash flow for strategy 3 so far for the month of October is about $2,600. Waiting for setups on strategy 1. And so a reminder, hey, we're at that time of year where basically if seasonality does kick in, we're approaching the end of October. And what we're seeing, I think, is that the year-end seasonality has been moved to the right a little bit. And so we'll anticipate some kind of a move up going into the end of the year. But we need the reversal signals before that takes place. Same on gold. Gold tends to get a little bit of a rally going into the end of the year. And that may have started, but gold's been kind of an enigma, if you will, for this year. It didn't provide its, seasonal bounce back here in the June-July timeframe, or everything was muted with regarding gold. And that may be partly due to, or a big part, due to a strong U.S. economy and a strong U.S. dollar. So that's what we have going on there. So, okay, next month we will be having a webinar BAM meeting on November 3rd. Be basically getting prepped into going into 2019. Premium training for our premium active trend trading members will be Wednesday evening at 6:30, and all those webinars are recorded and put into the archives so that you can go back and take a look at those as long as you're an active trend trading member, a premium member. We're going to be talking this week. I'm really thinking about basically calling a audible, and we're going to have about and discuss about how to establish, in a certain way, your directional bias. I think in the long run, it would help save traders a lot of money going forward. My son has been working, Brandon has been working on the website. I hope you noticed the modifications in the dashboards that have been set up for both free members, premium members, and the early warning alert / maps members. That's all in place now, so you'll be getting better and better tracking, better alerts. He's also working on something with Messenger, where to allow communications with the different levels of members with active trend trading, with the BAM, so that it'll be right there on Messenger. So if you use Messenger, it's going to be really positive, thing going forward. So that's what we're going. Hey, here's what we're doing on maps. Prior to the end of the month, probably going to launch this out next week. We're going to offer opportunities to become charter members of the new market action points, which is a replacement for early warning alerts. We had our first trade on that. Took a small loss on it, but it worked as advertised. It kept us out of a trade that would have caused a huge whipsaw. And so I'm very pleased with the first go around. So, hey, just remember, keep your A growing. Looking forward to starting planning for 2019. If you're a premium member, you can stand by. We'll be back at the top of the hour with the final hour. We'll see if we have anything that we want to trade going into the end of the day. So, until next time, I just want to say aloha, my friends. In case Messenger doesn't work out, we should look at Slack. Yeah, I'm going to pass it on to Brandon. Steve, he's doing a lot of good stuff. I mean, I'm really, he's my kid, and I'm really impressed the stuff he's doing on the website. So until next time, hey, have a great weekend. Aloha, trade well, and prosper. See you guys. Oh, Steve, just real quick. I think you can be on Messenger without having to be on Facebook. I think we don't know for sure, but we are checking that out. So, okay, aloha, guys.